US stocks close lower, dragged down by the Nasdaq. Google parent Alphabet shares slump after an event to promote its AI chatbot Bard. Disney surges in after-hours trade on an earnings beat and a massive restructuring plan. Asian markets open mixed, while the SGX Nifty indicates a flat start for the Indian market. MSCI says it will review and implement changes to free float of Adani Group securities after receiving feedback from market participants. According to Bloomberg, the Adani Group will also prepay a $500 million bridge loan due on the 9th of March. Billionaire banker Uday Kotak appeals to India Inc. to borrow from domestic financial institutions and not go abroad. Speaking as part of the CNBC-TV18 IBLA jury, he also says large corporates and startups are flourishing in India, but middle-level companies are not. Tata Steel's Narendran argues for scale, but says that a large economy needs thriving small and medium enterprises. Prime Minister launches a scathing attack on opposition without directly referring to the Adani controversy. Says the UPA government's tenure from 2004 to 2014 will be remembered as the lost decade. This came on the same day Congress President Mallikarjun Kharge reiterated calls for a joint parliamentary committee probe into the Adani crisis. Over 12,000 lives lost in Turkey and Syria as rescue operations continue. Turkish President Erdogan rejects growing criticism of the government's response to the quake and appeals for unity in difficult times, says it is impossible to prepare for disasters like this. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines this Thursday morning. A lot to discuss. But first up, as always, let's take a look at what the Asian markets are doing. They're mixed right now, actually. So we have Nikkei sitting with cuts of 0.5%. Taiwanese index is down around 0.1%. And Hang Seng, that one is in the green right now. So that is gaining around 40 points in trade. The Straits too is lower by around 10 points. So largely mixed, so to say, as far as the Asian markets are concerned. We have earnings which are continuing to trickle in. There are fears of rate hikes as well. So all of that is impacting the market moves in the Asian region for now. And SGX Nifty absolutely flat. It's a 2-point uptick that index is indicating. Remember, our markets did see some recovery in yesterday's trading session, closed higher by 150 points. So we'll have to see what would the market move be like today, considering what we've seen as far as the Adani Group updates from the MSCI is concerned as well. Of course, we'll discuss that on the show as well right now. But let's talk about the US markets. Wall Street ended yesterday's session lower, dragged lower by the tech pack. The Dow Jones closed with a 200-point cut, while the S&P finished over 1% lower. The tech-heavy Nasdaq closed 1.7% lower. Alphabet plummeted in trade following an event to highlight their new AI chatbot Bard. Shares dropped 7% after the bot gave an incorrect answer. Disney, meanwhile, announced its third restructuring in 5 years and plans to slash 7,000 jobs and $5.5 billion in costs. The company will now be reorganized into 3 divisions. Let's stay with the US markets then. Let's get some views coming in from Amy Wu Silverman of RBC Capital Markets. Listen in.
The options market would tell you that at least longer term in options being kind of 4 to 6 months out there, we're actually seeing more downside being bought. You know, in the near term, the options market certainly has been rambunctious. It almost felt a little bit like the pandemic kind of YOLO meme stock craze. We saw so much call buying, but you know, it's a tale of 2 tenors. So short term, there was a lot of bullishness, but longer term, you know, folks are starting to hedge more. That uptick is happening. Historically, it's more the bears than the bulls, but I will tell you the one difference now is for the last 10 years, there hasn't been a real alternative. Whereas now, you know, if you really are concerned about the market, you can just put it in cash, and cash is a real asset.
All right, that's the global market action. How will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. We have a lot of cues coming in from the global markets, our own markets as well. What is the market setup looking like today?
Hi, thanks for that. Well, yes, morning. You know, yesterday the markets did end higher. We had the Nifty, which was close to its 20-day moving average, which was a positive. Adani stocks continued to recover as well. So 6 out of the Adani Group stocks, in fact, gained for the second straight session. RBI moves were on expected lines. The major events such as the RBI as well as the Fed meet are now behind us. The next port of call will be the CPI data from the US on the 14th of January. And in the near term, the markets will be focusing on earnings as well as global cues. US markets closed lower overnight, Asia largely lower. The market is really contemplating what the Fed is going to go do next. SGX is indicating a bit of a flattish start. Today, weekly options expiry, we have the AMFI data for the month of January. Lot of results post markets which the street will be reacting to. So the likes of Adani Power, Cummins, Equitas, JB Chemicals, and results tomorrow, results today rather, Adani, Total Gas, IRCTC, Aurobindo, Lupin. So a lot to look forward to in terms of result reactions. Flows, FIIs net sold around 736.8 crores, so lesser quantum that we've seen at least in the past 2 to 3 trading sessions. DIIs continue to net buy, so net the institutions were buyers in yesterday's trading session. Levels to watch, on the upside it is now the 100-day moving average, and whether we can even sustain the 20-day moving average. And just watch out because the markets have now been, or the Nifty is making higher lows, so the intraday low has been rising or has at least risen since Friday's intraday low of 17,584. So that I presume would become an important support on the downside.
All right, that's the market setup. Ekta, thank you so much for that. Let's talk about all the stocks that will be in focus. Vivek is joining with that list. Vivek?
Well, good morning. Quite a few stocks on our radar on the back of, results that were declared post-market hours yesterday. First on our list is Trent. Now, quite a strong growth as far as the top line is concerned, especially when you're seeing it on a year-on-year basis. Revenues up almost 54%, EBITDA up almost 18.5%, profitability up 20%. The only concern being the margin contraction that's been seen on a year-on-year basis, coming in at 14% versus 18.2% last year around. Cummins India, very strong set of numbers. It's a clean beat as far as our own estimates are concerned. Revenues higher by almost 26% on a year-on-year basis. EBITDA is up 52%, and when you're talking about the profitability coming in at 360 crore, up 50% on a year-on-year basis, our poll was closer to 270 crore. Honeywell Automation, slight concerns as far as the margins are concerned over here as well. Margins lowest in the past 3 years. Revenues higher by 18%, EBITDA up 7%, margins coming in at 12.8 versus 14.1% last year around. Gujarat Pipavav Port, it's a very strong set of numbers from the company this time around. When you're talking about the revenues up 48.5%, EBITDA up 64% on a year-on-year basis, and profitability up almost 90%. Again, very good set over there. Adani Power, slightly muted set of numbers this time around. Even though the revenues were higher by 45% on a year-on-year basis, there was a one-time revenue impact this time around that aided the revenues. EBITDA is down 17% and profitability is down almost 96%. Lastly, keep an eye out for NCC as well. Good set of numbers from the company this time around. Revenues higher by 28%. Strong execution aided the EBITDA higher by 36% and profitability coming in at 157 crore versus 76 crore last year around.
Okay, that is the list of the stocks that you have to keep on your radar. Thank you, Vivek, for that. Finally, let me go across to Mangalam, joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So remember, the Nifty has been in that 17,650 to 17,850, 17,900 sort of range, right? Yesterday was a good day, and the Nifty moved towards the higher end of that range. In fact, just about closed at the 20-day moving average. 17,872 was the close yesterday, and the 20-day moving average is 17,872 itself. The SGX Nifty indicating an absolutely flat start. The reason why the up move took place yesterday was because the institutions were net buyers in the cash market. We had DIIs out by FIIs selling. At the same time, we saw a fair amount of short covering. During the day, we saw the Nifty open interest fall by about 4% on the Jan futures, rather Feb futures. But importantly, the FIIs, the data confirmed that 1,250 crore worth purchase in index futures, and they've actually covered almost 10,000 short contracts, as a result of which their long exposure has inched mildly higher from about 16-17% to about 19-odd%. The important data point today, the weekly options expiry, and ahead of that, the FIs have written 1 lakh puts. This compares with 61,000 calls that they've written. So what they believe is that there is a stronger support than resistance on the way up. There was short covering the 17,800 call, but importantly, there was a fair amount of writing in the 17,800 put for a premium of 32 as well. So that's telling you that, 17,750 is the first mark of support that bulls are looking for. However, from a long-term standpoint, we are looking at 17,700, 17,650 to 17,700 as an important support. On the way up, the 100-day moving average continues to be a bit of a resistance. The Nifty Bank, which is underperforming, has faced face resistance as at both the 100 and the 20-day moving averages. So for any move on the Nifty, we have to watch whether the Nifty Bank can first go ahead and cross these resistance marks or not.
All right. Thank you, Mangalam, for that. So that's the trade setup for the day and the stocks to watch out for as well. We'll slip into a break now. Up next, the MSCI says it will review and implement changes to the free float of Adani Group companies. We'll get you more details on that after this very short break. Stay tuned. Welcome back. You're still tuned on Power Breakfast on CNBC-TV18. The MSCI in a notification has said that it will review and implement changes in the free float of Adani Group companies. Vivek is here to tell us more on this one. Vivek?
Well, good morning. That's right. So all of the Adani Group stocks will remain in focus. Remember, in line with the volatility and the kind of news flow that the Adani Group stocks had seen, MSCI had actually invited participation and feedback from the members regarding how exactly it is that they're going to treat the stocks that are already present in the MSCI Global Standard Index. So today, they have come out with a notification saying that, they have received the feedback from market participants on Adani triggered free float review. And what they're going to do is tomorrow, they will be implementing the free float changes as far as Adani Group securities are concerned. Now, why is this important? Remember, all of the Adani Group stocks, barring the recent listing Adani Wilmar and NDTV, are part of the the MSCI Global Standard Index. And in fact, if you're talking about the stocks with the highest weightage, Adani Enterprises, Adani Total Gas, and Adani Transmission top the list as far as the weightage that they enjoy as far as the MSCI Standard Index is concerned. Tomorrow is the MSCI review date as far as the February index changes are concerned, and this is when they are going to make the changes as far as the Adani groups are concerned. We spoke to a couple of analysts. What the analysts tell us is that it is unlikely that they would be deleting the stocks in this particular index review, but there is most likely going to be a weight reduction. So keep an eye out on all of the Adani stocks. Remember, Wilmar and NDTV aren't part of the MSCI list, but all of these stocks could see a negative reaction on back of the overhang that this particular MSCI update has put out.
Absolutely. Thank you so much, Vivek, for those important details. So, Adani Group in focus yet again in today's trading session. But with that, let's move on. Indian corporates need to borrow more from Indian institutions and not from foreign banks. That's the word coming in from veteran banker Uday Kotak. Speaking at CNBC-TV18's IBLA jury event, he said the risks of global borrowing is that foreign lenders may not understand the Indian dynamics as good as domestic lenders. Listen in.
I think, and I see a lot of corporates here, they should be borrowing more from Indian financial institutions. They're borrowing too much from outside. I'm sure my banking colleagues will agree with us.
Mr. Khara, you want to come in on that as well?
No, I think market is probably guiding them to borrow more from the Indian market. No, global markets are in trouble.
I believe that, and I'm not going into any specifics. I think this is a time for Indian financial sector to build its capacity, both in terms of underwriting skills as well as scale. And I do not believe global financiers necessarily have better underwriting skills, but India has to hone it, and its own financial sector should be able to do thorough diligence and get its underwriting right. If we do that, and we need to build a whole host of capacities in India so that corporates feel that the first port of call is to borrow from India. And the risks of global borrowing is that a person sitting in New York, London, Zurich, Hong Kong, Beijing, wherever, may not understand the Indian dynamics as well and is very much focused and impacted by media reports globally. And decisions can be taken more superficially without going necessarily into the facts of the case.
Okay, all right. So that's the word coming in from veteran banker. With that, let's move on. Prime Minister Narendra Modi launched a scathing attack on the opposition. This came a day after Rahul Gandhi raised questions in the Lok Sabha over the turmoil at the Adani Group. Without directly referring to the allegations, Prime Minister Modi accused the UPA government's tenure from 2004 to 2014 as one riddled with scams and said it will be remembered as the lost decade. His speech also came on the same day Congress President Mallikarjun Kharge reiterated calls for a joint parliamentary committee probe into the Adani crisis.
डिफेंस डील को लेकर के हेलीकॉप्टर घोटाले और सत्ता को कंट्रोल करने वाले लोगों के नाम उसमें चिन्हित हो गए हैं। आदरणीय अध्यक्ष जी, जब देश के लिए जरूरत थी और निराशा के मूल में ये चीजें पड़ी हुई है, सब उभर करके आ रहा है। आदरणीय अध्यक्ष जी, इस बात को हिंदुस्तान हर पल याद रखेगा कि 2014 के पहले का जो दशक था, द लॉस्ट डेकेड के रूप में जाना जाएगा। और इस बात को इनकार नहीं कर सकते कि 2030 का जो दशक है, ये इंडिया's decade है।
Okay, all right. On that note, we'll slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. It's time to talk commodities now. Manisha Gupta is joining us with all that update. Manisha, good morning. What's happening in the natural gas and crude oil department?
Sonal, thank you so much for that. Well, starting with the natural gas, and that one is trading at a 25-month lows right now. A bit of an uptick in the Asian markets right now, but not too much to read into, because after every uptick, we see the prices slam down, and looks like that natural gas is still looking for bottom here. We also have seen U.S. gas production increase to a 2-week high, but there is a decline in the LNG export, and that continues to weigh on. Also, there is the above normal temperature forecast till 18th of Feb, and that is keeping the natural gas prices yet under pressure. A bit of a strength, though, is what we are seeing for the crude oil prices. That one is trading at $85 per barrel back yet again. And we have seen the EIS suggest that the U.S. crude stocks have risen while the markets were anticipating a decline. But the support in crude comes in from the fact that the Saudi Arabia is hiking Asian market prices for the first time in 6 months. There is higher demand estimates from China. And also BP's Azerbaijan has now declared force majeure. So some supply concerns coming in from the Middle East also keeping prices in support.
Okay, all right. Manisha, thank you so much for all that update. Let's move on to the big